This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you are not ahead, you are under. It is Wednesday morning, 27th of May, 2026. Yesterday, Wall Street and European desks tried to price in a perfect soft landing. Today, the global macro reality is hitting back hard. We are broadcasting to portfolios worldwide, and every major time zone is feeling the heat. Let us get you caught up for the global trading day. First up, the 60-second global macro and crypto flash. Brent crude erases its dips. The brief geopolitical relief rally is dead. Brent has reclaimed the $98.50 level. With backchannel U.S Iran talks stalling, European and Asian energy importers are panic-bidding physical cargoes this morning. This has caused the S&P 500 and Nasdaq to stall out. U.S. futures are trading heavy. The realization that the Taiwan tech blockade will completely wipe out Q3 hardware revenues is finally weighing on the market. The AI supercycle premium is officially being priced out of the Magnificent Seven. Meanwhile, emerging market contagion is spreading. The pain of a strong U.S. dollar and high energy costs is breaking smaller economies, following Sri Lanka's massive shock hike. Global bond vigilantes are now circling other vulnerable markets. India's Nifty is facing sustained foreign institutional outflows. Look at Europe, where the ECB is caught in a trap. European markets opening in the red see the stock 600 slipping. They need to cut rates to save a crumbling German manufacturing sector, but imported energy inflation makes a dovish pivot nearly impossible. Finally, we see Bitcoin's global liquidity test. Bitcoin continues to hover around $76,500. While U.S. retail ETFs see choppy flows, sovereign wealth networks are aggressively accumulating to bypass the fractured SWIFT system. Let us take a deep dive into the simultaneous failure of the tech supply chain, energy inflation, and the emerging market complex. If you are managing a global portfolio today, you cannot rely on the hyper-globalized playbook of the 2010s. The world is splitting. Consider the semiconductor blockade. It is not just a U.S. tech problem. It is a global manufacturing crisis from automakers to electronics. Wall Street is waking up to the fact that you cannot substitute missing physical hardware with software updates. Profit warnings are coming. This brings us to the U.S. dollar wrecking ball. While U.S. investors fret over tech, the rest of the world is fighting a currency war. The combination of a hawkish Fed and structurally high crude prices is supercharging the U.S. dollar, creating a doom loop for emerging markets. Their currencies devalue, oil gets expensive, and banks hike rates to crush growth. If you hold unhedged EM debt, you are in trouble. Now watch the institutional hard asset barbell. Global Tier 1 asset managers are moving heavily into physical energy, copper, and defense. They are barbelling their portfolios with decentralized, trustless assets and completely divesting from unprotected ocean supply chains. Here's the TradeFlow take. Today is about capital preservation. The narrative of a quick diplomatic fix has completely failed. For our global viewers, hedge your foreign exchange exposure immediately and reduce your weightings in global consumer discretionary. Ensure you have direct exposure to physical commodities immune to sanctions. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.